We do think that the path of disinflation remains in place, and we see this particularly in the services sector, which has a big sort of domestic component in it in terms of the state of the economy, state of the labour market. We are going to see some tick up in inflation, we think, unfortunately, during the course of this year. A lot of that is down to energy and administered prices. On the question of activity in the economy, I mean, we have seen now a very weak profile, a flat profile of activity really since last spring. And that's caused us to have to revise down our view of this period.
It's pretty depressing, isn't it, that the degree of growth? Everyone's been hoping for a bounce back, and now it's basically, at best, we're flatlining.
You look at Northern Europe, we're pretty much, it's a story that you can see elsewhere as well.
So it's just, it's nothing to do with the UK, it's just everyone else is.
Well, there are some common patterns in there, certainly. Now, we do think that growth is going to pick up during the course of this year. And why do we think that? Well, one reason is that we still have a picture where there is positive real income growth for households. It's been going on for the last couple of years. We still see pay rising faster than inflation at the moment, so that's supportive. Hasn't yet come through in consumption, and our agents tell us this as well, that there's still quite a lot of cautionary behaviour going on. So the question is, at what point might we see some change in that?
But presumably at this stage you were kind of hoping to be able to have a more positive growth forecast. And yet what you've got at the moment is you've got growth that's basically been halved since last time around, inflation high. I mean, a lot of people would look at this, even economists, and say this looks like stagflation. I mean, how do you characterise it? I know you probably don't want to use that word, but it's definitely not the kind of cocktail that you like to look at.
So it's not a word I use, but because it doesn't really have a very precise meaning. But let's take the two parts. So we have seen quite a very flat profile of economic activity for since last spring. And I hope that we'll now we'll begin to start to see some pickup, but we need to see the evidence of that. On the inflation story, we have seen this continued sort of fall in what I would call the underlying measures of inflation, and that's really important. And it's really important that remains in place. It's still gradual, and we have to therefore watch it very carefully. The data are quite noisy at times at the moment, but we do think that path is in place, and that will be critical to what we do next.
But all of this, I mean, the Chancellor has made it very clear she wants more growth, and she has unveiled a lot of, and she's right. But you obviously you've seen what she's said about growth. You've seen her big speech. You've seen all the measures. From what I can kind of divine, it doesn't look like that's forced you to lift your forecast for growth, has it? I mean, am I missing something there?
Well, so I think it's absolutely right to address growth and the supply capacity of the economy. It's the agenda of this government. I mean, the previous government had many similar aspects of that.
It's kind of the agenda of every government, in truth.
Because growth has been the supply growth has been weak since the financial crisis. So we're talking 15, 16 years now. So it's absolutely right for the government to have this agenda. We support it. But we have to be realistic that any measures to seek to raise the growth rate, which are good things to do, will take time to come through.
So there's nothing that we heard about last week that is going to have an impact on growth in the next couple of years?
It will take time. Now, I hope that we'll start to see some effects on confidence. Businesses particularly having confidence. Yes, I think this really is going to happen. These measures are going to happen. But the measures themselves, they all take time.
Has this government damaged Britain's growth prospects with any of its policies so far?
I think this government's come in with a determination to tackle growth, actually, and I very much support them, as I did the previous government. And
in terms of monetary policy, you've cut interest rates. A lot of people are looking at the decision today and thinking, well, there's going to be quite a few more to come. There's been a market reaction. Yeah. Do you endorse that market reaction we've seen so far?
Well, look, we don't endorse a path of interest rates. We've used the words gradual and careful to describe our future policy, sort of in a sense stance, if you like, for very good reasons. One is because we've got to see the evidence that this path of disinflation continues, the underlying path. And secondly, I'm afraid there's just a greater amount of uncertainty in the world around us.
Donald Trump has already levied some tariffs, talked about tariffs on his nearest neighbours. Do you see a kind of possible scenario whereby any of this could be in any way positive for the UK?
I don't see tariffs as positive. I'm sorry. I'm pretty much I've said many times I'm a pretty ingrained free trader, very ingrained free trader.
But Donald Trump's not.
No, and I think obviously we've got to give the administration time to form its policies. I worry, as I've said a number of times, about anything that seriously fragments the world economy. That's bad for growth.
Even if the UK is not directly affected by it?
Well, the UK is a very open economy. I mean, we're always described as a small open economy in a sort of in an economics context. So the UK cannot avoid, the impact on the world because we are such an open economy.